Good morning, and welcome to episode 32 of Getting Rich. I'm your host, Rich Checkan, president of Asset Strategies International, and today is Wednesday, June 23rd, 2021. Last week, if you recall, we were just on the verge of the Federal Open Market Committee meeting and Jerome Powell's comments last Wednesday. And I shared with you prior to that announcement that I felt the Fed had painted themselves into the corner. They were out of ammunition, and basically all they had were words to fight back inflation. Well, Chairman Powell spoke last week, and on his words, gold and silver both fell about 5% in 2 days. Now, granted, that's not nearly as bad as Bitcoin falling 53% in 1 day after Elon Musk speaks, but it's bad enough, especially when you consider what he said, what the markets heard, and probably what should have happened was the opposite of what did happen. So Chairman Powell came up and he said that, one, they expected to raise interest rates twice in 2023. This is 2021, folks. So he said he was going to raise rates twice in 2023, and he was going to go ahead and start talking about tapering back asset purchases. The reason for that is because the inflation that they were seeing was worse than they anticipated. So they were surprised by inflation. They kept saying, remember, for a couple months now, it's transitory and manageable. And then this past Wednesday, he said, it's more than we expected. We were fooled. He went on to say, and this may be covering himself for when things go amiss in the future, he said, in this environment, post-pandemic, post-shutdowns, we have zero experience in navigating these waters. We have no models to help us and guide us through this. Yet, despite the fact that they were fooled by inflation, despite the fact they have no experience, and despite the fact that they have no models to help them, they were confident that they could control inflation going forward. What did the market hear in all of that? Those were his words. What did the market hear? The market heard we're going to raise interest rates twice. That's it. That's all they heard, and none of the markets liked it. They were worried that the punch ball was getting pulled away and the party was coming to an end. Let's take a look at pricing this past week. Gold fell 4% as of this morning to 1783.30, down from 1859.10 last week. Silver fell to 2601 this morning versus 2784 last week, 6.5% drop. Platinum fell to 1083, down 6% from 1153 last week. And palladium was down 6% as well to 2673 from 2849. Since silver fell a little further than gold, your gold-silver ratio went up to 68.79 versus 67.01, and the dollar's up a little over 1% at 91.70 versus 90.50 last week. I'm telling you, folks, the Fed has nothing. He actually said in his comments that with interest rates as low as they are, they really don't have many options. So they're trying to coax the markets to do what they want with their words. And I'm telling you, that is not enough. All I can say to Chairman Powell is thank you very much. He has given us a back up the truck moment for gold and silver. And I mentioned this on the radio last week. If you don't have a truck, go out and get one. And then back it up and fill it up with gold and silver. The prices are lower than they ought to be. The pullback was overdone, and you have an incredible buying opportunity here. That being said, I want you to, as always, subscribe to our YouTube channel and like us. Leave us any comments or questions you might have so we can address them on the air. Be sure to follow Asset Strategies via social media channels. Subscribe to our monthly newsletter and our twice weekly alerts in the description paragraph below. And whatever you do, especially right now where the Fed is fighting inflation with words and no ammunition, remember that getting rich starts with keeping what's yours.